Greetings everybody, Sive Morten here with the Forex Peace Army.com. Let's take a look at what's going on here on the euro currency as usual. So in two words speaking, currently is really tricky moment. It's based not only on some technical issues that we see here on the chart, but also on some data and close standing events that is coming to happen very soon. And the situation stands a bit actually, at least market is not sending any evident signs of the possible direction. Currently, I would say that euro is becoming moderately bearish. It means that overall long-term bullish context still exists, but in a shorter-term perspective, it could show a bit deeper retracement. Actually, I already talked about this in last week when we discussed the first signs when something was going not as it should be, right? So when we see some deeper retracement, some disrespected levels, some failure of some patterns that the normal situation should work, and some other things. And not only on the euro currency, but in cross-market analysis, we see the same. This comes in a few moments. It's really a tight gathering of the different factors. Recent payrolls report was not absolutely bad. If we take a look some average view on payrolls numbers this year, in general pace of the job market, well, it's a bit depressed, but it's not awful. And recent data with actually 100K new jobs, if even we consider the revision of the previous numbers. So okay, it was 75K. It's slightly better than the 50K that was been expected. And it's not signaling on any strategy, right? Despite that we see from alternative views concerning the retirements, firings, some bankruptcy of the firms, that everything goes to recession. Signal from the payrolls report is not absolutely dovish for the Fed. This is first moment. Second, now everybody actively discuss in social media that the gross domestic product, it will be released very soon, also it promised to be really great, somewhere about around 3.54%. It's really a tremendous pace of the gross domestic product for the United States, and actually if it will be solved, then the Fed will have even fewer reasons to cut the rate. Finally, in the current confrontation with the Japanese financial system, they need to hold the carry gap, right? So currently it's around 2.4%, and any activity from the any side will might narrow it. So if Fed will start cutting and Bank of Japan start hiking, it's very soon will be over, which promised to actually trigger big collapse on the stock market in the United States that we saw last year in August. If you remember, this was some changing in the policy of the Bank of Japan, and has made a really immediate impact on the stocks. Currently, stock market is already stands under pressure. Just take a look at recent performance of the grade 7 on the tech stocks, Oracle, and even Nvidia. So a massive sell-off. And take a look what's going on in Bitcoin. The drop on the Bitcoin signals that on the stock markets there are problems. So margin is decreasing. That makes Bitcoin to fall. Investors need cash. They start selling everything that they have. So taking it all stuff together, you could see that in the current circumstances, euro might be also remains under pressure. And I think that, well, since it's not guaranteed that the Fed will cut rate in December, this is big uncertainty factor, and it means that it's not priced in yet. In any case, if Fed will not cut, that could trigger euro to drop, because investors were hoping that actually this should happen, but despite any Donald Trump pressure. That's what I have currently in mind, and actually that makes me think that chances that euro could move lower somewhere below 114 area seems, well, absolutely probable. Now back to the technical picture, how it could happen. In fact, currently I see a few possible ways. So first of all, this possibly it might be the 3-drive pattern. So since our hand shortest idea stands at the edge, and actually, well, nominally it still keeps some chances, but based on the performance that I see in overall background, I still tending to the actually scenario where the hand shoulders probably still will fail. To make it work and to actually show the upward fast action, it can't happen based on the current technical picture. So definitely market will have some external impact. That should be some external driver, some big statement from the Jerome Powell, for example, or from somebody that could change the current sentiment on the market. Based on the background that we have now, and based on the technical picture, I would say that chances on the downward action seems more preferable, more probable. And from that standpoint of view, one of the patterns that might be formed here is a free drive, because if hand shorts will start failing, and actually I think that's already started failing, usually, and in most cases, on the ruins of the hand shorts, as I talked many times already, the butterfly appears. And free drive patterns very often presents as a combination of the side-by-side butterflies. This is a very common thing. You can see crossing of the extension stands very tight, so it's very typical for the free drive pattern, and it should be somewhere around 1417, 1426 area. That will be nearest target to the downside of this butterfly. Now, if you take a look a bit wider on this big cluster, you could see that lots of target stands around. For instance, if it will be not just 1.7 but maybe 1618, downside extension, it stands around 1350. We have also here the XOP from the initial ABCD pattern, right? And take a look, that's also conference support. It's big conference support on the daily chart. The 1322, 1390, that's most probable will be the direction. What might be the alternative situation? What pattern might be formed? Well, theoretically, if market will complete the free drive, it could try to form, well, kind of the hand shoulders here, so with this deep retracement up before downside action. This also might happen. Currently at this point it's impossible to say definitely whether this will happen or not. So our strategy here is follows. First, we're watching for completion of the nearest standing target, and then we'll start looking what is going on around. So if we will see big response, clear bullish pattern that suggests upside bounce, this chance will appear. If nothing, market will just keep going higher, then we're just entering this area and waiting for a response up from this area, because market is not strongly depressed, so this level is rather strong and very probable here we will get the bounce. Looking at the lower time frames, why actually I think that downside action is more probable here. So on the 4 time frame chart, with the performance that we see, as you can see, a job report has brought some volatility, but we actually do not see any changes, right? So collapse happens, market stands below the trend line and is forming some kind of the pennant consolidation. By looking on the hourly chart, you could see what it could be. So actually, as we said, wait for a minor pullback, do not consider any new longs, and we will take a look at an area of around confidence for possible taking the short position. So currently, you could see kind of the wedge ABCD inside points on the 1568 target, which perfectly agrees with this 1560, 1567 is a confidence resistance. So once market will get there, we will get the kind of the gutless triple to sell. Theoretically, we could use it for position taking. But the reason why I think that it looks more bearish, not just with this retracement or something, just take a look on the dynamic. So very small retracements, no pullbacks, big drop, collapse here, kind of the choppy action, sideways performance, overlapping candles, deep retracements. Definitely, this is just a correction, so some kind of the retracement style of action. This is not the reversal, and it is happening not only on the euro. Just take a look at the British pound on the daily chart. Once weekly ABCD has been completed, what we have: bearish continuation pattern around support, no significant pullback, small kind of the flag consolidation is forming, which suggests another drop down to the 127.40, 126.80 agreement support. It also might happen. So next target will be there. On lower time frames on Great British pound, the same story with these head and shoulders. So you could see this big collapse down. It's not normal, so it's not the bullish performance at all. So that makes me think that actually bears have advantages in the current market. And even there, you can see that this type of action is, well, difficult to call as a reversal type. So it's more just like the consolidation. Finally, if we take a look at the cross market, here's we have on the 10-year bonds, reverse hand and shortest pattern. We are speaking about the pullback on the Forex because currently you can see market is forming right arm here. So yields are dropping slightly, and that of course makes some bearish effect on the dollar and let market show the pullback. So let's give market time to finish this pullback for this retracement. Besides, today's Friday already. Next week is also will be tricky because of the Thanksgiving celebration. So it's interesting to see what will happen next week. But currently, everything stands as I just explained. So let's keep watching, waiting for the predefined levels, and then make the decision.